Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what you see here is the bulls continuing to take out major areas of support. They've converted the middle band, the green line there. They've converted the 50-day exponential moving average. They finished that off yesterday. Now they're going to work on the FOMC reaction high, which is back here. That was the place where we originally failed, up at 2011.75. They just made new highs relative to that. We printed as high as 2012.75 in the last 20 minutes or so. So what you're left with here is a low, high, higher low, higher high now. Don't get caught up in trying to short this thing just yet. It may drop like a rock. It may drop like a rock in the next 30 seconds. But what we've seen more often than not is that these things go a lot farther than people want because everybody's trying to pick a top. So my suggestion would be to avoid that this time around, especially on Friday. If we're able to convert the 100-day exponential moving average, the yellow line, up at 13.5, there is no reason at all why the market would not go up and touch the upper band that coincides with the 200-day exponential moving average up at 2024. It will become a magnet, just like the FOMC reaction high became a magnet when the when the bears lost the 96 half high yesterday afternoon. These things tend to want to print. And to a certain extent, you need to let them because they just, and it's hard to buy highs. We had a retracement yesterday down into the 88, 89 area, which is where we had our proprietary level. And you know what? You just had to buy it. And that's what we did. I mean, it's just sometimes you just have to buy it. Came back down. Here's our proprietary level. Came back down, did a test. So right in here, we're like, you know what? Time to join the party. And, we've had to do that all week. It's been a very 2013-like market. It's like just, you know what? If you don't think it can go up anymore, watch it. Watch it just keep on going. And you can either be long or, you can be short. If you want to make money, you got to be long. Okay, so either you get long or lose money, totally up to you, or sit out. Okay, I'm looking for a dip to buy today. If I'm gonna lose money today, it's gonna be buying a dip that doesn't work, not trying to catch a top. If we start to make lower highs in the shorter term time frames, that's fine. At least you got some risk to lean on. But what's happening right now is we just keep making highs. Europe stole the dip with a nice little double bottom at 4 o'clock in the morning. They ran it up 10 handles. Is that going to be the best looking dip we get all day? Maybe. I don't know. I want to get into the regular session and see what there is to see. But, be cautious. Be cautious. If the reason you're getting short is because we've gone up so much that we need to come down, that's not a reason to get short. Ask the billions of people that went broke in 2013 if that's a good reason to get short, because it's not. Be careful. Finish your week responsibly. Come in next week. Eventually, we will pull back, and there'll be plenty of opportunities and plenty of handles to be made then. All right. Everybody have a good weekend. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I will be back Monday morning with another webcast. Trade 'em well, everybody.